All right, what is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be doing some stock analysis for Kohls stock because, as you can see here, the stock is up over 35% today after their latest earnings report and some news coming out about the future of this company. So, Kohls is up 35% today, but if you look at the last year, this stock has not been doing well the last couple of years. It just hit a new 52-week high, which is good for them. But you look at the last 5 years, this stock has been in a consistent downtrend, right? 2022, it was $60 a share. Now we're down to 20. This company's market cap is only $2.4 billion, which is very small. And when you look at their numbers here, what you're going to see is that revenue has been declining for a long time. Like I said, 2022, they did $19 billion of revenue. Now they're only doing $15 billion. So that's part of the problem. First thing we're going to get into is their earnings, okay? So they posted earnings of 10 cents a share, down from 20 cents in the year ago quarter, okay? So that's not good at all. Their EPS is half of what it was a year ago. That's terrible. But it beat the expectations of a negative 19 cents EPS that was estimated. So, okay, I guess I mean, I don't see how you look at that as good news, but to me, it's down 50% from last year. They're still in a steep decline. Then you look at revenue. Revenues were $3.5 billion, down 3.5% from last year. Still not good, but again, it beat expectations. So that really means the stock needs to go up over 30%. And then we have, okay, gross margin expanded. Congratulations. You get down to the next thing I want to hit here is the free cash flow. Net cash provided by operating activities was $630 million. So you have 630 million coming into the business, but CapEx was 400 million. Okay. So that's not bad. What else do we have here? A dividend, and that's it. Oh, this one's interesting too. So for this year, they now expect sales to decline 3.5 to 4%, which is an improvement from its prior forecast of only 5 to 6%. So this is all just great news, and the stock really needs to go up 35% today, 36%, because they're still losing and still declining. They're still a declining business, but it's not as bad as we thought. So the stock really needs to skyrocket right now. Then we have the news that the previous appointed CEO, he's now permanent, Michael Bender. Okay, he was interim CEO the last 6 months, but now he's the permanent CEO. They're trying to regain their standing with longtime shoppers by focusing on private labels, jewelry, and petite sizes. Now, something to mention here is that this is just happening across a lot of different businesses, and just the whole retail sector is in this position right now. It's not just a problem for Kohl's. Go look at Target, go look at Chipotle, go look at Starbucks, Nike. There's tons of famous brands and retailers that have been struggling for probably, a year to 2 years now. Um, so I think it's just the state of the consumer right now. It's not that these businesses are doing anything different or they're making terrible decisions. I think it's just a weak consumer right now. The consumers are spending their money more carefully, and I think that's all it comes down to. So we have Buchanan. Okay, that was the previous CEO, and okay, then we have their EPS. Blah blah blah. Let's get into their actual numbers. Okay, so here's the P ratio the last couple of years. As you can see, it's a 8, which is very, again, they're priced like they're going out of business because they almost are going out of business. But the P is cheap. I mean, now I would look at it like the stock is overvalued. Really, it shouldn't be 20. This stock is going to go back down. It's gonna, well, take me back to Google. This stock will go back down to being $15. That's what I think. So it's a $2.4 billion company. They're doing 15 billion in sales, which is actually really good. 15, if you're only worth $2 billion and you're doing over 15 billion in sales, that's really good. Assuming that, I mean, even if you're not making, see, it really comes down to growth though and guidance, because that's why you're worth only $2 billion, because your sales is in a constant decline. So I don't know why anybody would want to own this business. Um, I mean, okay, so free cash flow of $1 billion. That's pretty good. That's really good. Because that look at that free cash flow yield, 47%. That's really good. Net income, I mean, again, though, it's really not even that. This says next 12 months EPS is 35, but a $2.4 billion company and you're doing 200 million in net income, that's pretty good. That's actually that's a 10 times, yeah, it's about 12 times or 12 times earnings, right? Same thing here, $1.70. Yeah, I mean that's the valuation's really not bad from that perspective. For how much money they're making, you're basically, paying nothing for it, but it's because it's a dying business. It is a dying business. You just look at their revenue. That's the problem. As long as that keeps downtrending, that's going to be an issue. And I mean, maybe this new CEO can. I mean, he's not new. He's been there for a couple months now, but maybe he does turn things around, or maybe they pick up a little bit. Maybe they come up with some strategy to grow revenue, grow sales again. But I don't know. I think it's going to be tough. Um, I don't know. I think it's going to be tough. I really do. So the balance sheet, not great. 100 million in cash, over 2 billion in debt. I just don't see it. They're cutting the dividend, which this is a good thing in my eyes. You don't need to be paying a dividend when your sales are going down. Shares outstanding, just not really doing much. So yeah, I mean, I don't know. I don't know. It's just not. Forward PE of 20, okay, trailing PE of 8. So what are they saying they're going to do for EPS? I mean, 1, and then it's going. Okay, so interesting. So in other words, next year or this year, there's pretty much flat, but next year is when sales is supposed to drop 25% or so. That's going to be a big deal, right? Again, because it looks like they're going out of business. Yeah, sales down 3% this year, then another percent. I just see it slowly declining. I don't know. I mean, I guess there's a small chance this company turns around. I just think it's not very realistic. It would take a miracle to turn this business around. This is just a dying retailer. Um, I don't know. I don't see it happening. I mean, I could see why. Yeah, I mean, I don't know. I think this stock is going to go back down. I think this rally here is going to be very short-lived. And that's it. That's pretty much my whole philosophy on the stock. So let me know what you guys think down below, and I will see you in the next video.